Hey everyone, my name is Nikhil Suri. I'm head of product and engineering at the Wormhole Foundation, and I'm very excited to be here with you all today to talk about, well, the official title of this talk is Beyond Tokenization and How Multichain Can Help. But what we are really talking about here is institutions coming into crypto. So institutions tokenizing their assets, onboarding into crypto, and ultimately, unlocking the next $1 trillion on chain. And to get started here, I'm going to talk quickly about asset classes. And as a fun exercise to start with, a question for you all, though maybe one more to think about for a couple seconds or a couple minutes before, unless you want to shout out an answer, is does anyone know what the largest asset class in the world is? Think for a few seconds, maybe shout out an answer. Yeah, it is real estate. And do you know how large it is as an asset class? 200 trillion? Yeah, good answer. Very close. And we'll see the answer in the next slide, which is real estate is a $380 trillion asset class. So real estate is massive, and you can see some of the other largest asset classes in the world on this slide here. So you have insurance, a $7 trillion asset class. Debt is around $100 trillion. Gold, around $20 trillion. Stocks, around $150 trillion. And then you have derivatives there as well. The number there is $1 quadrillion, although that is a bit misleading because derivatives cover a whole variety of asset classes and a whole variety of contracts. So they don't neatly all fit into just one asset class, but the sum of all kinds of derivative contracts and all the derivatives that cover all the different asset classes is around $1 quadrillion. So quite a large amount of money in these asset classes. Now, from this, where is the majority of the world's capital, actually held when it comes to these asset classes? And that is in funds. So many of these names you likely know: Vanguard, Fidelity, BlackRock, Brookfield. Maybe you yourself even have some money invested in these kinds of funds. Money market fund, bond funds, ETFs, bond ETFs, stock ETFs, REIT funds. And whether it's mutual funds, trusts, or ETFs, they really all boil down to the same thing. And what is a fund? A fund is a structured product that is designed to let individuals and businesses gain exposure to these industries and the revenue or yield that these industries generate. And now, there's one thing that all of these funds today have in common, and that is that they are all off-chain. So how do you get these funds on-chain? That's where the process of tokenization comes in. And many of you probably already know or are intimately familiar with what tokenization means and maybe even how it works. But all that tokenization is converting real assets into digital assets that exist on the blockchain. The best example of this is stablecoins. Everyone knows stablecoins, people use stablecoins, and there are other examples that we'll touch on later that are emerging, that are exciting. And so you've seen the asset classes, you've seen the funds. We've talked about tokenization, which is how we actually get these on chain, but one of the big questions remains, which is, why would you actually want to tokenize an asset? What are the benefits to you as an asset issuer or to asset issuers generally for tokenizing assets and bringing them on chain? And so to tease the benefits first, we'll do a quick review on some of the downsides of traditional assets. And at a high level, the primary issue is that they are antiquated. A few points here. They lack digitization, there are limited market hours, there are slow and cumbersome redemption processes, there's generally been limited access to alternative assets in the traditional financial world. So not everyone has been able to participate in those markets. And then fractional ownership is another big one. And so a couple of the points that I'd want to highlight here are, first, limited market hours. As we all know, crypto is a 24/7 industry. When it comes to stocks or more traditional assets, you're pretty much limited by US Eastern time or the time zone of whatever the market is in. And for example, the NASDAQ is only open about 6.5 hours every day. And I must not be the only one in this room who has maybe done something during the day, worked during the day, and come home and wanted to work on my stock portfolio or trade something, and I can't do it because the stock market is closed. So full 24/7 market hours is a big advantage of crypto. Another one I'd like to highlight is fractional ownership. And we've seen a lot of traditional finance firms, we've seen actually some innovation in the world of fractional ownership in the traditional finance world. But historically, you could only own, one stock, you could only own one house, and some of these assets, especially real estate, require a tremendous amount of capital to actually participate in and gain exposure to. And so fractionalizing ownership of assets is something that natively can happen on the blockchain and can really broaden access to many more people to participate in these markets. And so from these downsides, you might now be able to imagine what the benefits of tokenization might be. So some of the reasons here: greater liquidity, real-time settlement, broadening access for your asset, the potential use in DeFi, which I think is still nascent but emerging and something we'll touch on later, reducing human error, automating things natively on-chain, and then also having 24/7 markets. And a couple of the points I'd want to highlight on here are you have real-time settlement. So if you want to exit a position in the traditional finance market, let's say on a Friday evening, you'll need to wait until Monday morning to get your money back or to have that sale processed. That means that you need to wait almost 3.5 days to take the proceeds from that sale, rotate into a new asset class, or do something new with that money. That can impact risk management, that can impact liquidity requirements, and overall slow down your velocity of liquidity. Doing it on-chain means that you're not limited at all. Things settle in real time. It's instant, which means you can work with a far greater velocity of liquidity. Putting assets on-chain is also a huge bonus in terms of accessibility. Many asset classes have traditionally been gated in finance today. So real estate is a good example. Private credit is another great example. On-chain, once tokenized, anyone can buy, sell, hold, and generally gain exposure to these asset classes. So some of the benefits of tokenizing assets. And now the next question you might have is, who is actually tokenizing assets today? Beyond maybe what you hear about in popular discourse, such as stables and the stables. And the list is, the folks who are doing this are certain funds, and then there are certain platforms that provide services to tokenize funds. So some of the examples of platforms that provide services to actually tokenize funds are Securitize, Centrifuge, and Mercado Bitcoin. You've probably heard of many of these. Mercado Bitcoin, if you haven't heard, is one of the largest sort of tokenization services in Latin America, has around 200 million of assets, so growing that assets under management. And these are all companies platforms that we at Wormhole work very closely with as well. And they've helped some major funds tokenize major amounts of capital. And so there's BlackRock, the BUIDL fund, which many of you might have heard of, is a money market fund. Apollo ACRED is a private credit fund. KKR and Hamilton Lane have also tokenized some funds. I think KKR tokenized a sort of health investment fund, health insurance fund, and so really broadening access to some of these asset classes that other people haven't had access to in the past. So they have all the benefits we mentioned before, and I guess to wrap up this section on tokenization, I want to go through what a tokenized asset actually looks like under the hood. It'll still be high level because there are a lot of technical details and regulatory details that we'll gloss over, but to give you a more concrete example, we can look at BlackRock BUIDL. So BUIDL is a tokenized fund that has around $2.8 billion under management. And now, to actually create shares of BUIDL, you have to be a qualified purchaser, and you go through an onboarding process and a funding process. And once you've gone through that funding process, you get your tokens, you get your shares of BUIDL issued to you on chain. One of the neat things about BUIDL is that there's a daily sort of dividend and balance that's calculated and paid out. So your token balance will increase or decrease based off of the sort of change and dividends from the fund. And then as an investor, you have a couple of liquidity options. So one option is you can have a direct USD redemption process, which is the more typical redemption process that most investors are probably familiar with. You send those funds via a bank, a wire transfer. It takes a couple of days to get those funds. The other liquidity option that you have once you now have these tokens on chain is you can do a secondary sale with Circle into USDC. And so you can send your BUIDL shares to a liquidity provider, you can receive USDC, and now you'll have USDC on chain that you can immediately rotate into another investment. And so this is a much faster process that is unlocked by having this fund and shares of this fund on chain. I think the other thing that's cool about BUIDL is that it's not a POC, it's not a marketing announcement, it's not like in a separate blocked off sandboxed environment that's just for testing. This is actually on mainnet chains, it's live today. You can hold it, you can buy it, you can send it across chains using Wormhole, and it's live today, which is pretty exciting. And hopefully, as we'll see later on, gaining more utility in DeFi as well. So now I want to talk a little bit more about Wormhole and how we've been working with asset issuers, asset managers, and generally institutions who are coming into crypto. Though I'm sure many of you know as well what Wormhole is. Wormhole provides interoperability between blockchains. At the lowest level, Wormhole allows you to push or pull data from one chain to another chain. And Wormhole is robust, it's battle tested, and has an entire suite of products built on top of it that both cater to specific use cases and then also make the UX of going cross-chain really smooth. Going cross-chain is under the hood a pretty complex process that requires a lot of different steps, and we really try to make it a one-click sort of seamless experience for any user who is doing that. And so you can really think of Wormhole as offering a suite of products that has solved one problem really well, which is going cross-chain, and is perfectly positioned to also address the various needs of asset issuers coming on-chain who want to access all of crypto liquidity and users from day one, and who want to collaborate really deeply with a partner who has worked across lots of different ecosystems in the space. So when it comes to tokenization, why is being on multiple chains even important? It's many of the same reasons that you have multi-chain tokens today. You get access to the entire user base of crypto from day one. You are able to access all of the liquidity in crypto from day one. You can seamlessly move your liquidity between different ecosystems and take advantage of those opportunities in those ecosystems. You can cater to any preferences that investors might have across different chains and the opportunities that are on those chains. And generally, you broadly gain access to utility within DeFi. And so we've worked with asset issuers on things like, very bespoke kind of solutions. So things like high security requirements and multi-verifier systems. I would argue that security is one of the biggest, most important things for asset issuers as they're bringing funds with massive amounts of assets under management on chain. We've worked with asset issuers on custom compliance rules, custom compliance requirements and rules to follow when moving assets across chains. We have burn and mint transfer frameworks for the smoothest user experience, making sure that when you move tokens cross-chain, the supply stays consistent across all chains that an asset is deployed on. We've collaborated with some of the biggest folks in the space, so blue chip DeFi protocols and some top tier infra providers. And overall, Wormhole products are live in mainnet today with tokenized funds, and it's proven tech that works for these funds. So along with all the white label solutions that we have, we also have an entire product suite that we've built to cater to these asset issuers. So we have Wormhole NTT, it's our framework for burn and mint token transfers across chains that many of our partners use. There's Wormhole Settlement, which allows for faster than finality transfers at low cost and low latency. Portal Bridge is a front end that many of you probably know for transferring assets via Wormhole, and maybe some of you even use Portal Bridge. Wormhole Connect is a customizable and embeddable UI widget that you can pull into your own site in a few lines of code and pull in all the functionality of Wormhole token transfers, transferring tokenized assets, transferring other kinds of assets that use Wormhole, transferring assets in general. And then Wormhole Scan is our explorer to be able to view all kinds of cross-chain transactions. For custom integrations, we have just general message passing, so you can just integrate directly with the Wormhole stack. And then we have Wormhole Relaying, so you can have a one-click experience and your transfer is automatically relayed to the destination chain. So product suite overall has been built and catered towards the needs of asset issuers. Now, what we were really excited about is just everything. Excuse the Slack alerts. What we're really excited about is everything being tokenized and building towards a future where all kinds of assets are going to be tokenized. So looking at some data, we always have charts that are up and to the right, which is exciting. And this is a bit of an outdated chart. I think the last date is January 1st, 2025. So not up to date in the last 6 months, but still gives you a good idea from rwa.xyz. Tokenized assets in 2024 were up 32% in terms of market cap. The current RWA market cap, that's a figure I updated yesterday from rwa.xyz, is around $24 billion. And then there's, again, growing utility in DeFi, which I'll talk about on the last slide. So what does DeFi utility even look like for some of these funds on chain? You might think that, okay, you have the funds on chain, what do you even do? Do they just sit there? Do you just hold them? Do you just get the dividends from if you're holding BUIDL? So part one is just getting the assets on chain. And that's been a huge amount of work. And I don't want to discount how much work it is to actually get the assets on chain and sort of offer them to crypto users and in the crypto space generally. Now, part two is actually using these assets within DeFi. And so now, again, while this is nascent, very new, still small, there are a few exciting use cases that I want to highlight here that we're starting to see. So first use case for BlackRock BUIDL is it can be used as collateral for USDTB, which is a stablecoin on Athena. This asset has around $1.4 billion of supply, a significant portion of which is BUIDL. So that's one use case, is using BUIDL as collateral for an on-chain stablecoin that's offered by Athena. Another use case is ACRED, which is Apollo Global's tokenized private credit fund. You can use ACRED you can use Morpho to get boosted yields on ACRED by using SACRED as collateral, sort of borrowing USDC and then looping that to get boosted yields on Morpho. And then another use case, this is a Solana, so I'm sorry to highlight a Solana use case here, but it's still an exciting use case, and as Wormhole, we are chain agnostic, so we're excited about all kinds of use cases, but you can use ACRED as well as collateral on Drift. So that's, again, ACRED is live on multiple chains, and you can use it in multiple venues that are in different ecosystems, something that's only possible when ACRED is a multi-chain asset using Wormhole. So we're excited to see more of these DeFi use cases pop up. We're excited to see them pop up across all the different chains that Wormhole is live on and all the different chains that these tokenized funds actually go to. So this is exciting. Yeah, so that's everything I had today. If you're interested in tokenization or wormhole interoperability, or just want to chat, just please come find me or get in touch. That's my email and that's my Twitter handle. So thank you so much for listening.